S&P 500 and NASDAQ closing at all-time highs. The Dow up, gold up, real estate.
Hey everybody, Jake here with TrendSpider to go over another video in the technical analysis series. Today we're going to be answering the question, what is the MACD and how can I use it in my technical analysis? So the first thing is the MACD is also known as the moving average convergence divergence. It is made up of three different lines and histograms. So 2 lines, 1 histogram. The blue line here is just the MACD, which is the 12-period EMA minus the 26-period EMA. The yellow line is the signal, which is the 9-period EMA of the MACD, not the 9-period EMA of price, just the MACD. So if we turn on the actual EMA 9 on the price, you'll see that this blue line, or excuse me, this yellow line here does not match up with this green line, which is the EMA, the 9 EMA. So just to clarify, the 9 EMA is not the signal. It's the signal is the 9-period EMA for the MACD line. So those are the 2 lines associated, and then the histogram is just the difference between the MACD and the signal line. So if we look at this here, let's just look at, let's say, this period right here. We've got the yellow line, which is the signal. We've got the blue line, which is the MACD. I'm just drawing a line between the two, and if I pull this down and overlay it on top of the histogram, you'll notice that this is the exact length of that histogram bar. So the histogram is just showing the difference between the MACD and the signal, and anytime the MACD line is below the signal, it's going to be this red histogram. Anytime the MACD is above the signal, it's going to be this green histogram, which is a function of the 0 line. So one thing that I wanted to point out here, also the 0 line is a big part of this. The 0 line is essentially, as I mentioned, anytime that the MACD crosses to the upside through the signal, it's going to show up as a positive histogram on the 0 line. But the 0 line itself is essentially anytime the 12 is below the 26, that is when the MACD is going to be below the 0 line. So you'll see the blue line here, the MACD crossing down below the 0 line. That is when the 12, as you can see with this red line, is below the 26 EMA. So anytime you're seeing that breakdown, it's essentially showing you that this the shorter term EMA is breaking down through this longer term 26. Now, same thing on the upside. You can see here that anytime that this blue MACD crosses up through the 0 line, you'll see here that the 12 is crossing back up above the 26. So anytime your MACD is below the 0 line, your 12 is below the 26. Anytime the MACD is above the 0 line, your 12 is above the 26. So just some different ways to look at that. And on top of that, another signal on the MACD is anytime the MACD crosses below the signal, that can be a sign of the trend changing. You'll see here that this happened in mid to late February of 2021, and you'll see here that we didn't just drop right down, right? The MACD crossing down through the signal, we didn't just tank and crash. You can see how it takes sometimes a while for the price to continue down, and that's exactly what we saw here. And you'll notice here, even though the MACD is crossing down below the signal, we're still above this 0 line, which is shaded in this green area, because you'll notice that the 12 did not cross below the 26. It's still above the 26, and that's why we're still in this green zone, which is above the 0 line. So on top of that, you can also see here whenever the MACD crosses to the upside through the signal, you'll see that, sometimes this happens after the move has already somewhat been made. So one thing that I'd like to do with the MACD is actually look at when the histogram starts to change. So you'll see here that the histogram starts to move up here way before the actual MACD crosses. So one thing that I like to do is I like to scan for a MACD below the signal, but the histogram is starting to increase. So that means that even though the MACD is below the signal, the difference between these two is increasing, meaning that the MACD is getting closer to the signal, which means it's curling up. So you'll see here, anytime that we do have that MACD histogram starting to increase on these bars, notice that these bars are getting higher lows, you'll see here that you can actually pair this with the MACD. So the histogram starting to uptick and then the actual MACD crossing are 2 different signals. So we do have this in the scanner. I have this in the scanner. It's the MACD possible curling, possible cross. And what I'm looking for is the histogram has increased, meaning that it's moving up here, and the MACD is less than the signal, and then the MACD is less than 0. So this is really looking for any time that the MACD has become really kind of the momentum is really faded in the trend. So you could change this to any time the MACD is greater than 1, and you could look for these things that are above the 0 line. In this case, I'm looking for a MACD below the 0 line. So you can scan for this. You can go and back test this. That's the nice thing on TrendSpider. If you wanted to play around with this and see if it fit within your criteria and within your trading style, you could go and back test anything you'd like. So you just go to the strategy tester right here, and let's say that you simply just want to test out a MACD cross. You'd go to condition, indicator, and you'd go to MACD crossed up through the other indicator, which is just the signal here. And we could say, you know, what's the return after 10 candles have passed? We're on the daily here on IWM, so we could just test out and see what's the return once the MACD crosses up. And that is after 10 trading days. So in this case, you'll see that this has a 62% win rate, a 38% loss rate. You can see the drawdown. You can see the net profit, the asset performance. And the main thing here is the asset performance. So, you know, the MACD may be a positive trade, meaning that it has a mean trade return of greater than 0. But you'll see here that if you would have traded this perfectly over the last 8 years, you would only be up 53%. Whereas if you would have just held IWM over the last 8 years, you'd be up 144%. So this strategy tester really tells you, is my trading strategy, whether that's just trading the MACD or a mix of the MACD, RSI, and a few other indicators, is that actually just beating buy and hold? Because at the end of the day, why would you be trading something if you're not just beating buy and hold? You might as well save yourself some stress and just hold it rather than trying to trade it and still not have the same return as you would but just buying and holding it. So that is the way you can use the strategy tester. You can use the market scanner in the same way. I just went over that the MACD histogram increasing while the MACD is still below the signal. And so there's a lot of different ways to use it. Hopefully this video was helpful in understanding different ways that you can use it, as well as just understanding what the MACD is. There's a lot of people that use the MACD, but maybe you're not exactly sure how it works and how it's derived. So hopefully this video was helpful in doing all of these things. And thank you for watching this episode or this segment of the technical analysis series. We do have a 7-day free trial, so you can try out all these different things on TrendSpider. If you have any questions, let us know.